Well, it's great to see everybody. Welcome to Austin, and I'm really excited to. This is my first time at FinTech DevCon, and so I'm thrilled to be here, and I'm really excited to get to connect with a bunch of you over the next couple of days. But thank you for joining us for this talk early on in the conference. So as a reminder, just to make sure you're in the right room on the right flight, we're going to be talking about building for the underbanked today. So looking at how, from a couple different lenses, mine from the perspective of an investor and Santiago's from the perspective of a founder and builder, how we build accessible and inclusive financial solutions. And we'll talk about what we mean when we say financial inclusivity and what we mean when we talk about scarcity of data. Just as a caveat, neither of us are developers by trade. So this is going to be more, I think, of a conceptual conversation. We're going to get a little bit into the weeds, but we will not be as, I don't think we'll be as nerdy isn't the right word, we'll be nerdy in a different kind of way. So hope you bear with us. But also, I think we framed this discussion in a way knowing that you all come with different perspectives in what you're building. And so we've left a little more space at the end for Q&A, roughly around 10 or so minutes, maybe a little bit more. So we also want to hear from you all in what you're seeing in your markets and what you're building. So excited to really dialogue with you on this during this session, but then also throughout the rest of the next few days. So by way of introduction, my name is Matt. I am a partner at Accion Venture Lab. We are a seed stage fintech fund. We focus on identifying early stage companies that are building what we call fintech for inclusion. 90% of our investments are outside of the US, including Santiago's company, which he'll introduce in a moment. But we're based here we're based in the U.S. in Washington D.C. So we do a lot of work in stateside as well. Previously, I did have roles on the developer and technical marketing teams at both Heroku and GitHub. So it's good to be back kind of with the developer audience. It's been a few years. I also have an 18-month-old son that is not here, but I figured he'd make ways in the presentation. Santiago, you want to introduce yourself?
Hi, I'm Santiago. I'm from Mexico, based in Guadalajara. I am CEO and co-founder of Moffin. Moffin is a startup based in Mexico that we help companies to build deeper and more structural relationships based on data. So we do screening for companies. We connect different data points to have a full picture of companies and people to make decisions. And I am in charge of product and growth, and I'm also a very passionate rock climber. Thank you.
So Santiago will come up. I'll give a couple of introductory comments just to lay the scene, and Santiago is going to bring some more perspective from Mexico. I also don't want to put him on the spot, but Santiago told me before this presentation, this is the first time he's given a talk fully in English. So kudos. Great. So we're going to talk about 4 things here today. I'm going to kick it off by just setting the scene and making sure we're all on the same page when we talk about financial inclusion, the value of it, why it's important, but then also we're going to talk around the journey of financial services, how they become more digitally supported and enabled, but also how we perceive it as not fully solving the problem, what some factors are still at play. And then Santiago is going to come up and give some more explanations of what they're seeing, particularly in Mexico, and some of the ways that they've been able to somewhat solve this challenge of unstructured and fragmented data, and how they're trying to tackle some of these challenges. The nice thing is I think there's a lot of applications as well to the US and other markets where this isn't as much of a challenge, but I think the problems remain very similar. So why do we care? I think that's the first thing we should really ask here, and I hope all of you who are working in fintech and in this industry, I realize that it's maybe not a question that is asked all of the time, but really the reason why I got into fintech in particular was because I saw that it was a key enabler of a lot of different opportunities globally. If you think about the simple ways that you go through your life on a day-to-day basis, if you think about how would it be possible for me to do those things if I didn't have basic access to financial services, what would my life be like? And that's a question that billions of people have to ask on every single day. And the numbers are very stark. We'll talk about that in a few minutes. But also, it's when you look at the Sustainable Development Goals, the UN established different SDGs in which we think about advancing society forward in an equitable way. There are so many aspects of financial inclusion that fit into these different dimensions. In terms of reducing poverty, having access to basic food services, expanding industry and infrastructure. So whether or not it's an individual, if it's a family, if it's a small business, if it's enterprises, financial inclusion really touches every single dimension of what we do on a daily basis. So it encapsulates so much of what we think about when it comes to equality, inclusion, and building a better world. So just as a way of history, Accion, of which Venture Lab is a part of, has been involved in this financial inclusion question for over 60 years. It started out as a microfinance institution in Latin America, in the same time that the now newly introduced Prime Minister of Bangladesh was starting off with his microfinance work in Bangladesh. Accion was doing something similar in Latin America. And now we've evolved more into doing more advisory services, but also investment into financial services institutions, large and small. So we've also seen the way that the way that you approach this challenge has been evolving over those decades. So anyway, I just wanted to put this up here as a baseline. I think all of us would agree with this, is that financial services are important, full stop. So let's start with that. So there is some good news. If you follow what's been happening with global poverty, and again, extreme poverty is really defined as someone who lives on less than roughly $2 per day. It's been declining over the past roughly 40 years, which is really good news. There's some things within the data that tell maybe a little more nuanced story. If you look at that chart on the left-hand side, you'll notice that there's been huge drops in poverty, particularly in East and Southeast Asia. So a lot of those markets are evolving, but you're actually seeing it slightly go upward in sub-Saharan Africa. So and this is why we talk about this, but the challenge is that there are some caveats to it. One is, if you look at the data from 2020 and 2021, there's something pretty substantial that happened there. COVID really reversed this trend. What we saw is that there was a slight uptick, flatlining to slight uptick in poverty rates. It was the first time we had seen it in over 30 years. And within that too, there's still, we talk about the fact there's still just about 1 billion people living on less than $2.15 per day, but we also, there's also a large number of what we call moderate poverty. So if you look at $4 per day or even $6 per day in terms of sustainable living, there's even a large swath of individuals around the world who also are encountering that sort of financial strain. So that doesn't even tell the full story. The other challenge is that there's gender disparity here. We're seeing an increase in the number of women that own small businesses globally, but they actually present a larger proportion of the financing gap globally. We'll talk about the financing gap here in a second. So the three challenges, this is what we think about on a daily basis in our work. Global poverty is increasing, as we saw. When we think about access to financial services, so this is what we consider unbanked. So someone who can't go and get a bank account, can't get a bank loan, can't do any of the sort of things that we oftentimes take for granted here in the US. There's still roughly about 25% of the global population that cannot do that on a daily basis. The other challenge we'd like to talk about is this credit gap. So when we think about the number of the overall demand for credit services amongst small businesses around the World Bank has estimated that demand is undermet by about $5 trillion. So that's a suggestion around, and we believe that it's not just a lack of liquidity or a lack of access to capital that's in the market. The reality is that it's just not being delivered efficiently to the channels by which it can or should be delivered. So this kind of encapsulates the whole challenge with exclusion, as we call it. It's really taking from that macro lens down to what specifically individual and small business pain points are on a daily basis. there's reasons why this is happening, and so when you read the literature on it, when you talk to practitioners, anyone, you go to DC, you walk down the street, you might find 3 or 4 people that work at the World Bank, and they've done a lot of research on these things, and and I think it really gets summed up into 3 core areas around why this is happening. The first is access. So this is really from the financial institution's perspective. It's their inability to reach a customer. So whether it is that they don't have that the customer is not digitally native, there's no access points, the financial institution doesn't have the capabilities or skill sets. I would also argue that this has something to do with the efficiency and how an institution tries to access those customers. But on the customer side, what they believe is they don't have an existing relationship with the bank, so it doesn't enable the initial opportunity to access capital, but then also for any future opportunities to access capital just isn't there. And the simple baseline around not being able to open up a bank account from the start, which can really is the start of the flywheel to get access to those financial solutions. Another dimension here is affordability. So that's both from and a lot of times that comes from the lens of the financial institution themselves. They either are too risk averse to take on a certain customer, and ergo they're not able to actually start on the diligence process to underwrite that customer effectively. For me, this is a systemic challenge that a financial institution has undertaken, and I think what Santiago is going to share in a few minutes is really honing in on enabling these financial institutions to help improve this affordability challenge, and also in some ways the accessibility challenge. The third piece this is an interesting one. There's a little bit of a, when you look in these markets, you actually have a lot of customers who could go and get a loan if they wanted to, but the APRs would just be extremely punitive. So hundreds of percentage rates. It's just a very, very challenging thing, but a lot of times financial institutions decide that because that exists in the market, there's not actually a market pain point. And so within that, these financial institutions decide, well, if the market is operating efficiently, and that's what this loan shark is saying that customer should be lent to, then there's no reason for me to try and provide them a more competitive or more accessible product. And so there's all these things there. I would say there's, depending on what type of customer you're looking at, or even the market you're looking at, one of these could have a higher prevalence compared to others, but the reality is that all 3 of them operate kind of as a 3-headed monster to cause these challenges. So the belief we have, though, is digitization and really bringing customers in via digital financial solutions can help. I think that's what we are all trying to build here. And but I have to offer a little bit of a caveat then, and I'm going to share a little bit of why that's the case. So going back to COVID, when we mentioned 2020 that we did see a slight uptick in poverty, there also were some positive stories we saw out of that. So if anything, we're noticing a huge prevalence in digital, or a huge increase in digital adoption in a lot of those markets that we were showing that have encountered historical rates of extreme poverty. If you look in India, for example, and what India Stack has done is essentially has brought over 600 million individuals into the financial services sector in just about a generation. So it's those real, I think, step functions forward that are really helping take a bite out of this poverty challenge. At this point now, and these are pretty stark numbers, but if you think about over 3/4 of adults globally now have some sort of digital banking account, whether it is a mobile money account or just a traditional bank account or a neobank, but that's up. It's up over almost 25% since 2011, so about 10 years. In 2021, 40% of adults in emerging economies use a digital merchant, which means they essentially use digital money or digital payments to transact with some type of merchant. This also includes B2B payments, so that's really exciting. But then also bill paying is getting much more prevalence, and we saw a huge amount of deposits in mobile money accounts. So these are all indicators of great. Okay, we're starting to see digital financial services get brought together and being adopted in these markets. But what I would argue is that it's only really tackled one of these 3 areas in a real instructive way. it definitely solves the access problem. It's just so much easier for you now to have enabled digital financial services and transact. But you still have, and Santiago will allude to this, you still have some of those adverse conditions. You still have these high APRs that are ostensibly causing financial institutions to not make as many effort or make as much headway in delivering these affordable solutions to customers. And so they don't really go through the steps to actually resolve the challenge. So we're getting there, but I don't think we're fully there. So I'm going to wrap up just with this last slide and kind of talk about where I think we need to go with this, and this will dovetail nicely into Santiago's talk. But if you've been involved in this space for 10, 15 years, you've kind of seen this evolution in how we're thinking about fintech. And when we started investing about 12 years ago, we were looking a lot at these at some of these initial entry points for financial services around mobile money, around using social media to try to provide more effective credit scoring. These were really interesting ways of moving forward, but I think what we're now starting to see, particularly on this wave of embedded finance, but also more effective data sharing, is that there's a new way, I think, of democratizing information that's available. So it doesn't require, I think, as much, where it actually enables a lot more institutions and organizations to embed financial services really at the point of use. This is why we're seeing, particularly in many of these markets, why a subcontractor in the construction industry can now get a loan that's directly tied to their output with a contractor. That wouldn't have happened 10 or 15 years ago unless there was a real close relationship with an underwriting financial institution. There's just so many more open access points, and so I personally feel a lot more optimistic around where we're going with things in ways that I think 4 or 5 years ago I was a little bit concerned. So I think with this next wave, and as I think about what we continue to look at and would love to continue to talk with more of you about, is how we continue to really redefine the building blocks of financial services. What are the ways we can continue to use open, accessible data to really embed these solutions into ways of working that is directly accessible to small businesses and at the point of where they actually need that financing. So that's kind of the state of the industry. And with that in mind, I'm going to hand it over to Santiago, and he's going to give some more specific perspectives on what he's seeing in Mexico and how they've been tackling some of these challenges.
Thank you, man. Sure. Hi, everyone. I'm going to talk a bit of how is the situation in Mexico and how we've been working with this. So me and my co-founders, we have a background of working in fintech. And we decided to move to this problem because in Mexico we have like 60% of the population with access to financial services. And the meaning of that is they have a saving account or probably an account with a retailer, something around that, but not exactly credit. Only 33% of the population have access to credit. And that doesn't mean affordable credit card. That means with a high interest rate loan in microfinance or something around that. Just as an example, my first credit card, being a college student in a mid-class family, it was above 50% annual interest rate. So it's not very affordable. And also other loans go up to 500% of APR, and this is real, and they can go up more. And this is because financial institutions, they are not optimized. They work with an army of persons doing manual processes, and they don't have even SaaS for that. When we start working in the first fintech, me and my co-founders, we had to rebuild everything because there was no management system, there was no collection system, there was no system for screening. And I decided to put a pyramid of how we get to this 500% rate. That is, the cost of financing is high for starting because financial institutions don't have certainty of who are they going to be financing, and if they don't have data, they won't trust them. Then underwriting, we can also see limited data with low coverage and high cost that doesn't meet the requirements. And that's getting better. There is a bigger data ecosystem now, and it's getting evolved. And then we can dig into operation expenses, like you have a 5-person team for collecting payments and for having to send the bank accounts and everything, so it's not very optimized. And the default rates, they say, every non-bank financial institution say that their secret sauce is how they evaluate. But that's, it's really funny because when you talk with them, they evaluate the same, and they got limited resources to choose which customer they should take. We decided to go with underwriting because it's the first thing you have to face when you start doing a loan. But there's a lot of problems there. The first thing when you want to start lending, you think about, let's say, credit bureau. That in Mexico is a very old institution that it takes you up to 6 months to open an account and to connect with them. And they don't have a REST API. They have you have to put a server with a VPN, and you have to connect with them directly and run a lot of testing to have it online. Then 80% of the, or 90% of the non-bank financial institutions won't have software engineers. They probably have a person or two doing IT that they know how to give support to installing Office or something in their operating system. Also, data services for screening or underwriting, they're very expensive, and they ask you for upfront payment. And if you are a startup or you are starting to run digital processes, you won't want to commit to a high volume of consumption because it's going to be very expensive. There are some providers that they ask you for a $25,000 upfront, and you are just starting with a probably $50,000 ticket for your startup. So you won't invest like half of your budget to afford a single provider. And then the complexity of analysis. They do it normally manually, and they connect data in spreadsheets or even in paper. So when we started, we thought that connecting the Buró de Crédito, it was the first thing to do, and it was really hard. Banks don't want to offer a REST API for fintech because they don't want competitors. So we decided to build the first API for Buró de Crédito, and we thought it was enough, but then we found out that there was no engineers and they couldn't consume it. So we decided to do no-code forms. So any company can just log in with their own accounts and start using the credit bureau. After that, we faced the challenge of how they evaluate customers, because looking at a credit bureau at the beginning is not easy, and if you're just starting, you will find a lot of numbers and you will need to hire an analyst. So we said, okay, let's build a pre-built data evaluation. That would be what they want. And it wasn't enough. You don't have enough coverage. Back like 10 years ago, you probably have a 40% hit rate on credit bureau because people didn't have any credit product. That's getting better with the bigger fintech companies. They're helping. But you also need to aggregate more data to have the information for everyone. And when you aggregate different providers, you find with the problem they are not stable. They have high downtimes, and you need to have a very stable infrastructure. And we built redundant connections, but that wasn't enough either. We needed more providers because they were just not reliable. So we decided to focus on this. We are doing an iPaaS, an integration platform as a service. that connects you with a number of data providers. We've been researching, and there are more than 150 data providers in Mexico that they are relevant. And in order to have a full picture of people, if you want to provide services to anyone, you will probably need to connect a couple of them, or maybe 10 or 5. And the problem with this is that they are not structured. They are small teams building small digitalizations, and data point A is not compatible with data point B of a different provider, and that's very hard it makes it very hard to evaluate. And reliability, as I said, it was a huge problem. This is how we get normally a credit score. It's not readable. And imagine, you probably are engineers in here, but they're not, and they don't know how to read that. So we decided to make that standard, and so anyone in the world that wants to offer products for now in Mexico can get and understand this data. Now it's a JSON. And also other example is the date of birth. Like the first one is in Spanish, and it comes from the credit bureau, and that's a date. And it's not in format, normal format or anything. And the other one is just also in Spanish, but it comes from a public register from Mexico. What we're trying to build here is something that makes it comparable and compatible. So anyone in the world can offer or have access to this information. And this is a problem that replicates anywhere in LATAM, at least. That's where we are focused. And yeah, it's getting messy. Till now, we've been in market like 3 years ago, and we are serving sectors like agro, microcredit, small businesses, and new startups. And we have helped to launch more than 30 businesses, and they launched way faster than they would if they did the connections by themselves, and they don't have this already built. And we have transacted more than 1 million loans that they've been evaluated through Moffin platform. And non-digital lenders now are offering their product 20 times faster. The problem is that the gaps of data that doesn't end here. Many people don't have access to anything. They don't have traceability of data. As an example, we're working with a big enterprise tiles seller that they want to help extreme poverty segment that they don't even have a floor. That's the good description for this segment. And of course, if they don't have a floor, they don't have access to financial services. And they don't have data, and if you don't have data, you don't have credit. So you can't afford a floor. That's where companies can innovate and do things. And they're trying to offer a financial service that they offer to these people a way to save money to pay their floors in a recurrent way. So that makes this sector of people have traceability data of saving and good behavior of payments. And then our mission is to enable that data to our platform so other companies can have access to this information. That creates new opportunities. And this is the same behavior that you will find in SMBs. When you start doing your own company, you want a credit card and you don't have access to that because you don't have any history. But surely you will find the necessity to hire internet or a phone line or whatever. So integrating that data is the next step for us, and I think it's going to be filling the gap of non-information. So just as a conclusion, I wanted to deliver this message of that there's a huge necessity, not only in LATAM or in Mexico that we have this context, but in the world, many people also have access to financial services. We think data is one of the ways that you can impact there. And there's a need of new data providers that helps digitize this, that will let us to have more affordable financial services and reduce the underbank. And basically that's the message I wanted to deliver. Thank you, that's it.
All right, we have about 10, 15 minutes for questions. Yeah.
Is there any focus on education on how online loans in general for those who are underbanked? Just curious what you guys have done for that as well.
Yeah, I think there's been, I think, differing forms of research on whether or not financial literacy is important. I think from what I see, it's not just a matter of delivering it. It's exactly how exactly you get it across. I think that's where, in a lot of cases, for someone who's not, I'll retrace that. I think a lot of folks who are considered underbanked actually have greater awareness of financial literacy. But like they've been informally lent to. So there's the existence of lending circles, roscas, chit funds. They're called different things in different markets. But in many cases, there's been local community lending in an informal way that means a lot of people are already aware of how to do so. I think where the literacy component falls flat is if you're trying to deliver a service that has not been, I think, truly understood or utilized. And that's why I think the embedded services are helpful is, look, if you're a small business, or say you're a small manufacturer, you understand the value of using working capital to grow your business. So if you offer a loan that isn't specifically oriented toward the supply chain that you have normally been working within, then it's a little bit harder for you to understand, okay, how are the terms here? How is this being invoiced? Is it against what I'm billing? Is it against is it against the terms of payment I have with a supplier? So I think the more you attach it, at least what the research has shown is the more you attach it to that typical way of working, the easier or more effective it is for someone to understand the value of the loan and also the terms of repayment, because they're so accustomed to already having to pay back suppliers and that sort. But yeah, absolutely, it's a lot of around exactly how you deliver the education as much as the education itself. Yeah. Yeah.
So on those communities, most of the time people do cash, right? They either pay cash, they get paid cash. How do you need the product? It's fine, but how do you guarantee them to be able to deposit money so they can actually use the products, and how do you do you guys also work with local businesses to establish some kind of ATM network and stuff like that, or how does that work?
Yeah, so I think we've seen, the nice thing, I think that's where mobile money in particular has been helpful, particularly if they can do transactions entirely through that, because that provides a store of value. But you're absolutely right in that if you're transacting using financial services in the first place, where you put the money, there's still a ton of operations that are done entirely in cash. And that in itself presents a particular issue. If you look at Nigeria, for example, I think I was reading a story a couple weeks ago that right now the equivalent of $1,000 weighs about 3 kilograms in bills, in actual paper money in Nigeria. So it presents there's a security risk there as well. The hope is that, and this is where I think financial institutions are now starting to kind of get a little bit smarter on this, and actually is where digitally native financial institutions like neobanks, and in some cases some NBFCs, non-banking financial corporations in India, are being much more savvy with trying to create digital transactions more so than just pure cash. So they're also encouraging. You'll see a lot of agents with these NBFCs that are now collecting cash on hand with some of the customers that they're lending to, and depositing it on their behalf. So in some ways, the account is being managed and owned by the NBFC, so that the individual or the small business doesn't have to own it themselves, run to the bank, do a deposit. Because you're absolutely right, there's still a large number of those transactions that are done entirely in cash. So yeah, that really kind of those institutions serving as a bridge to open up those accounts on behalf of their customers has been a pretty helpful step in that regard. Yeah. Yeah.
Well, the question is if we enable different businesses in Mexico.
No, you're able to support like financial,
Uh-huh.
digital wallets.
Yeah, we,
US, Western, the market international.
yeah, we have a couple of customers that they do operate, or they are originally from other country, US, Colombia, Chile, or anywhere, and we help them to like soft land in Mexico and have a better understanding on data, because having access to an account for a Mexican is hard, but for a foreign is harder.
Are you going to be around afterwards?
Yeah, I'm gonna be around.
Yeah. We're here all week. Okay. Anything else? Great. Well, we're here all week, so would love to have continue these conversations and just learn more about what you're all seeing in these markets. But thank you again for taking some time to hear us out. Appreciate it. Have enjoyed the rest of the week.
Yeah, thank you very much.